Hello and welcome to another daily market update by Market Intel. Today we cover the S&P 500. I give you an Elliott-Wave update of our outlook about the S&P 500. Feel free to use the link in the description. It takes you to our website dailymarketupdate.com, and here you can register for free and you get daily updates for free about the S&P 500, the Nasdaq, gold, cryptos, stocks and oil. Now, if we scroll down, you can see here our written update. That's what you receive, and you can see the charts. So I think we start on the daily time frame. I give you an outlook about the S&P 500. You can hide the text here, and then you see the full chart. Now, this is the daily chart, and it shows that we are in an uptrend. It shows a bullish perspective in our primary scenario. The S&P 500 has a potential to climb higher. It most recently climbed above the July highs from last year and is currently in an uptrend. Looking here at the daily chart, you can see that there was a substantial low that formed in October 2022. Since then, the market has been in an uptrend. And most recently here in October 2023, that was also a substantial swing low at 4,122. Since then, the market has been in a very aggressive uptrend actually. And we see this as part of the magenta third wave. A third wave is typically the most aggressive trend in an Elliott-Wave structure. So the idea is currently that here, sort of early in 2023, this larger degree fourth wave in white completed. Since then, we could count 5 waves up in blue to form magenta wave 1, a wave 2 pullback into the October 2023 lows, and now we are in this third wave. Price is just hovering around this key resistance level around 4,808, which is a recent very substantial swing high. Obviously, to complete this uptrend and to carry on with this uptrend, to continue, we need to take out this resistance area and the price needs to maintain above it on a sustained basis. How likely is that? Okay, let's take a look at the 4-hour chart now. First of all, this is our primary scenario, further uptrends. It's important to mention that in the alternative scenario that we see with 35% likelihood on this 4-hour chart, we haven't completed this white wave 4 that I just mentioned on the daily chart. So this is still a possible scenario that this wave 4 will extend and the downtrend, the correction, a long-term correction is still in operation basically. But really, to confirm that, the price needs to break below 4,122. We're not even close to that level, and therefore the wave count here that's highlighted in magenta remains the primary scenario, especially as long as the price holds above this previous resistance, now support level at 4,634. Let's go to the 2-hour chart for a little bit more detail. On the 2-hour chart, you can see this magenta wave 2, which bottomed in October last year. Since then, the market has actually moved up without any deep pullbacks, which makes the interpretation somewhat ambiguous to a degree. But we can count already in blue this wave 1 potentially complete, but that's only the alternative. In the primary scenario, this blue wave 1 is actually still unfolding, and you can see also our subwave count for that. Basically, the idea is that early in 2024, this yellow wave 4, which is part of the blue wave 1, completed, and we're now waiting for this wave 1 to complete. The idea is that this wave 5 still has a little bit of room to go, and especially with a break above the recent highs, this should give the market the upside momentum that it needs to complete this yellow wave 5 of 1. In an alternative scenario, the blue wave 1 already completed, as I just mentioned, and we are already in a corrective wave 2, but we only see this with a 38% probability, so it's only our alternative scenario is currently less likely. And in this event, if this really unfolds, first of all, it needs to be confirmed with a break below the 4,548 support level. It's an invalidation point for the current primary scenario. And in this scenario, then in the alternative, the market should find support in this wave 2. In this support zone, in this trading zone that you see on the chart, it's between the 78.6 retracement level and the 50% retracement level, between 4,278 and 4,479. The market should then find support there and start a third wave a little earlier than expected. In our primary scenario, the wave 1 will finish first, then the wave 2 correction will follow, and afterwards a third wave should take us to new highs. So it's overall quite a bullish outlook. In the primary scenario, we should still see short-term further upside, but then quite soon a corrective wave 2, which is not bearish, it's just a pullback in an overall uptrend. Yeah, that's my update about the S&P 500. Thank you very much, and feel free to check out the link in the description that takes you to dailymarketupdate.com. Thank you very much. Bye-bye.